Hi, welcome back. My name is Kujo. So we are going to continue from where we last the other time. We are not going to waste time. So still on the overview. Now we are at the point where we talk about the book, the anatomy of candlesticks, their formation and what they mean, right? So this ebook is divided into the following sections. We have the candlesticks anatomy, right? So if you are a medical student or a medical practitioner, you understand what is anatomy, right? We have the human anatomy and all that, right? So we are going to use that scenario in this book or this profession. Now, just as humans, candlesticks have different body sizes, and when it comes to trading, it is important to check out the bodies of candlesticks and understand the psychology behind it. That is what you will learn in this session, right? So anatomy actually talks about what the different body sizes of the candlesticks, right? So look at that. I don't want to be ahead of ourselves, right? So I'll just stick to the book and move gradually, right? So just be patient. I know some of us have idea already, but then let's move in that order, in that sequential order, so that I don't skip things or other important stuff. I want to move in that sense so that I'll have the time, the opportunity to capture everything, right? So, and then the two, we talk about the candlestick patterns. Candlestick patterns are integral. They are an integral part of technical analysis. They're a very important part of technical analysis, right? Now, candlestick patterns emerge because human actions and reactions are patterned and constantly repeated, right? So when you look at charts is actually talking about the past history. In fact, the history of that particular currency or currency pair, right? So the chart actually gives us the opportunity to look at that, because nobody can actually enter a market without actually looking at what's happened the previous time. It is a feature that we don't have hands over them, right? We don't have the opportunity over them. But for our past and even the current, we have what? We have the opportunity to look at them, right? So you look at your history and then the current, and then you can even predict what is going to happen in the future. So without data, you can't have correct analysis. So that is why technical analysis is very important. Of course, I know some people, in fact, many people have their reservations on technical analysis, but that will be another topic for another time. So let's just continue and then concentrate on what? The basis of candlestick patterns, right? Now, here, in this section, you will learn how to recognize the most important candlestick patterns, the psychology behind its formation, and what do they indicate when they form in the markets, right? So the candlestick forming, that particular candlestick forming, its formation, and then what they indicate, right? When the particular candlestick forms, right? Either red or black, either red or black, or whatever color that you have chosen them to be. What does it mean, right? The size, what does it mean? That candlestick forming, opening here and closing there, what does it mean, right? So look at that, look at them. Then we talk about the market structure. So in this section, you will learn how to identify trending markets, ranging markets, and then choppy markets. We even have the fourth one, right? Okay, so we have the trending market. So the trending market consists of the uptrend and the downtrend. You have a look at all these things. We have the uptrend and then the downtrend. Sorry, and then we also look at the ranging markets. When you say a market is ranging, what does it mean? And then we also have the choppy markets, right? Which every trader should actually avoid. That's the fourth one, choppy markets. Now you will learn how these markets move and how to trade them professionally. You will also learn how to draw support and resistance and trend lines. Then we'll move to the fourth one. We do the time frames and top-down analysis, right? So multiple time frame analysis is very important for you as a price action trader. In this section, you will learn how to analyze the market using the top-down analysis approach, right? So when you say top-down analysis, when you look at the time frames, we have, in fact, we have 1 minute, we have 5 minutes. In fact, from 1 minute up to any time that you can trade, 1 minute to 1 year, right? Months. weeks, days, 4 hours, 1 hour, 2 hours. So it depends on what you think you can trade. So every trade that any trader enters has a time frame, a time that you entered what? The market, right? So I basically do actually trade on the 1 hour time frame, right? Some people do 1 minute, some do 30 minutes, some do 1 month, right? So all these time traders, we have special names for them. We look at them. So they fall under what is called the types of traders, right? So if you might have heard what is called a scalper, a swinger, a position trader, and all that. We have a look at them. We just relax. Then we move to the fifth one, what is the trading strategies and tactics, right? Every trader has in fact, every professional trader, of course, many traders are around, right? We have many traders who do not have strategies. They don't have they don't have tactics. They just enter the market when they feel like they have to enter the market, and then exit when they think they have to exit the market. They don't have strategies. So those traders usually lose in the market because it's like you don't have any direction. You are just moving anyhow, doing whatever you think. And this profession is not do not flourish on impulsive actions, right? Being whimsical, just doing things that you think is okay. But the market should actually communicate these things to you, right? You should have a strategy, tactics, right? That you have to implement, right? So that is it. So under the strategies, I think that we just discussed a few here. We have the pin bar strategy, and we have the engulfing bar strategy. We have the inside bar strategy. We have the inside bar force breakout strategy. And then we will look at some examples, right? Now, I highly recommend you to master the previous sections, right? Before jumping on this section. Because if you don't understand the basics, you will not be able to use these strategies as effective as it would be. Now, this is very important. Now, like I said, this profession is what? A sequential one, right? So whenever you learn something and you do not actually have the full understanding or cannot even actually implement it, don't move to the next thing. Because you might encounter what is called information overload, right? And then you'll be doomed. You'll get lost. So you make sure that don't rush with. In fact, this profession, nobody can tell him or herself that he has learned everything in this business. And for that matter, he doesn't need to learn any new thing. No, that person is very wrong. In fact, that person is a liar, right? Every now and then we learn new things. So just take your time. Make sure you grasp the basics of this profession, of this training, right? So just relax. Make sure even if each day you can have 1 hour to actually practice, to actually learn, I think that would be good. It is better than using 4 hours, right, to try to understand everything one day. No, you can't do that. You probably forget some of them. You can't even understand them and then implement them. So make sure that you dedicate yourself to learning and practicing maybe 1 hour each day. Some people can do 2 hours. It depends on the ability to assimilate, to learn, right? So you know yourself. In fact, I know you know yourself. So just have time and then do this, right? So you do that, and then I think you'll be a good trader. So check on your time management. Now we also move to something we call a very important aspect of it. In fact, a branch of it that we call the money management. Like I said earlier, when it comes to trading or Forex, in fact, we have 3 major parts of it that they have to go hand in hand. In fact, they go hand in hand. You can't do one and leave the other. So we have the technical analysis, We have the money management, which is called the risk management, right? And then we have the psychology aspect of it. So actually, if you look at it from a technical point of view, even the technical analysis has a smaller percentage, like 30%. And then we have the psychology to be like around let's say 40, right? 40, and then the management can also be 30, right? So this is very important because you can learn and have the ins and outs of technical analysis. You can do good analysis. Like I said earlier, that you can be a good analyzer, a technical analyst, right? Analyst, but you will not be profitable in this business. So the fact that you are good with analysis doesn't guarantee your success in this business. So you have to know the technical analysis, know how to manage your money, right? Like I always say that nobody is actually poor, right? Nobody is actually poor. Or yes, nobody is actually poor. It's because the little that we have, we are not able to manage them. That is why we are always in need of something, in need of money. Because the little that we have, if you could actually manage them, you always have something on us, something to use. So the little that comes into your coffers, you should be able to manage them. So that is it. Now, so that is the money management aspect. So this section, you will learn how to create money management and risk control plan that will allow you to protect your trading capital and become consistently profitable. Right? Now, let's move to the history of candlesticks. Now, candlesticks have been around a lot longer than anything similar in the Western world. The Japanese were looking at charts as far back as the 17th century, whereas the earliest known charts in the USA appeared in the late 19th century. Right? Now, rice trading had been established in Japan in 1654 with gold, silver, and rapeseed oil following soon after. Rice trading had been established in Japan. Rice markets dominated Japan at this time, and the commodity became, it seems, more important than hard currency. Monihisa Homa, aka Soku Homa, a Japanese rice trader born in the early 1700s, is widely credited as being one of the early exponents of tracking price action. Right? So whatever was being done in the traditional way, this man tried to digitize them, right? Organize them, make them more readily available for people to come and have a look at it, right? He documented them and then tried to represent them in a better way, in a better form, right? So that was his idea. So whatever was being traded, he made them digital. He tried to have a system for people to actually have a time to learn, to read, understand, and then implement them. Now, he understood basic supply and demand dynamics. He also identified the fact that emotion played a part in the setting of price, right? Now, he wanted to track the emotion of the market players, and this work became the basis of candlestick analysis, right? So whatever we see on the charts, right, is what is actually happening in the real world, on the market. So if you see gold being bullish, gold going up, the price of gold going up, then in the real world, or in the traditional sense, that is what is actually happening. If gold prices decreases, it also happens on the chart. So the chart is not like an illusion, right? It's what is actually happening in the real world. So this man made the real world, what is happening in the traditional world, he digitized them, right? So that is the main idea of that. I hope you understand that. Now, he was extremely well respected to the point of being promoted to samurai status. We have about, I think in the whole world, we have about 3 of them. I think he's one of them. He's a very professional accolade, like a rank. Professors are we, I should say, emeritus or whatever. So he's very learned, right? So he invented this technical candlestick pattern analysis idea. That is it. Now, the Japanese did an extremely good job of keeping candlesticks quiet, right? The Japanese did an extremely good job of keeping candlestick patterns quiet from the Western world, right? Right up until the 1980s, when suddenly there was a large cross-pollination of banks and financial institutions around the world. So that means when he invented this, he did not want this book or idea to reach the Western world, as in leave their territory, right? So they were the only one trying to use and then see, in fact, test it for a long time, until all of a sudden you see we are living in a global world, and then things started being global, going global, everyone having access to resources, materials, and all that. So that was the idea. But when he did that initially, it was only for them, right? For the Japans. Now, this is when Westerners suddenly got wind of this mystical charts. Obviously, this was also about the time that charting in general suddenly became a lot easier due to the widespread use of the PC. Like I said, he digitized these things, the idea, the invention. So on the PC, with the help of the WW, whatever, the wide web, whatever. So everybody has that idea. You got to have the information. So people who initially had the wind of that started getting interested. They got interested, and then they wanted access. In fact, the avenue, then to actually learn these things. So that was when it was made global, and then everybody, even you and I here, have access to learn what is candlestick patterns. So that is the main idea of the main history of candlestick patterns. Now, let's pick it from here. So in December 1989 edition of Futures magazine, Steve Nyson, who was a technical analyst at Merrill Lynch in New York, produced a paper that showed a series of candlestick reversal patterns and explained their predictive powers. He went on to write a book on the subject, and a fine book it is too, thanks to Messrs. Finney and Nyson. Now, since then, candlesticks have gained in popularity by the year, and these days they seem to be a standard template that most analysts work on. Like I said earlier, now it is here. So it's a template, the standard, right? The basis. And if you are a new trader, you're a tyro or whatever, this is what you have to begin from, right? So these are the blocks, the building blocks. You have to get firm grip, firm understanding, a good understanding of the fair understanding of this. So that is it. Now, why candlesticks are important to your trading analysis? Now, candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. Thank God. Like I said earlier, technical analysis or charts, it's a reflection, a representation of whatever is happening on the market in the real sense, real time. So that is what chart is about. Now, by looking at candlestick, we can get valuable information about the open, the high, low, and the close of price, which will give us an idea about what the price movement, about the price movement. So don't worry. For every candlestick, like I said, we have open, we have the close, we have the high, we have the low of that candlestick. We have the anatomy of that. Don't worry, we have a picture and then we explain that in depth. Now, candlesticks are flexible. They can be used alone or in combination with technical analysis tools, such as the moving averages, the momentum oscillators. They can be used also with methods such as the Dow theory or the Elliott wave theory. So you look at this. when you become good. In fact, don't worry, we look at what is called indicators, technical indicators, right? And then what they do when you put them on the charts. So these things are actually something that is made, developed for us the traders, right? If you want them, you just put them on your chart. And then every indicator has a meaning, right? What it shows, when something forms around it, above it, below, or whatever, it has a meaning. So we don't put technical and in fact indicators for decoration purposes. I know a lot of us, especially the amateurs, they do that. They put technical indicators onto their charts, right? Just for showing purposes. I don't know. So why would you do that when it has no impact, no benefit to you? So that someone can call you that maybe you're a trader or what? So don't do that. This profession is not for showing. In fact, that is it. Now, I personally use candlestick with support and resistance, trend lines, and other technical tools that you will discover in the next chapters. The human behavior in relation to money is always dominated by fear, greed, and hope. Candlestick analysis will help us understand these changing psychological factors by showing us how buyers and sellers interact with each other, right? So we look at this, because if you're a trader and you have problem with fear, greed, and hope, you will not make it. In fact, that is a constant fight that traders have in this profession, right? You will one way or another, one way or the other, encounter them, right? In fact, they are inevitable. You will face them. So prepare and then set your mind to fight them. You have to overcome them, empower them, have dominion over them. Then you can make it. Now, candlestick provide more valuable information than bar charts. Candlestick provide more valuable information than bar charts. Using them is a win-win situation because you can get all the trading signals, right? Candlestick Pro app. So, in fact, when you move to the charts, right? On the chart, we have different types of representation that you can actually use, right? So when you open your trading view or maybe your MetaTrader, when you use the chart, we have different representation that you can use. We have the bar graph, we have the line, and we have the candlestick, right? We have about 4 of them. So you choose what you prefer. You make your preference. But the most commonly used for especially amateurs is the candlestick, right? It's a candlestick. It's very convenient. It's very easy to understand. The representation is very nice. So for the purposes of this training, we will use candlesticks, that chart. So that is it. Now, he said because you can get all the training signals that bar charts generate with the added clarity and additional signals generated by candlesticks. Candlesticks are used by most professional traders. So just imagine, it's not for only the amateurs or whatever, the intermediate, but for all of us. The professionals also use it. The banks, the hedge funds, these guys trade millions of dollars every day, and they can move the market whenever they want. We'll talk about this more. Now, they can take your money easily if you don't understand the game. If you can trade $100,000 trading account, you can't move the market. You can't control what is going on in the market, right? So I also said something like, initially, Forex was not, in fact, it is not meant for individual traders, retailers like us. It is meant for the big institutions, the banks, hedge funds. You see, all this, the financial institutions, they do this. So we are the retailers that we call ourselves. It's not meant for us. So this is the reason they are saying that you as a retailer cannot move the market, because how much is your money? The institutions have millions, billions of dollars that they are trading. So it is their movement that we step in. It's just step that what we follow. So if they are pushing the market up, follow it that way. If they are pushing it down, follow it that way in that sense. Because your money, how much is your money? And how much lot can you trade? How much a contract size can you actually enter a trade with? So you understand? So I'll specialize on this later. Now, using candlestick patterns will help you understand what the big boys are doing. The big boys are the institutions. That is it. That is what it means. And we'll show you when to enter, when to exit, and when to stay away from the market. So that is what's called technical analysis. You use that to know when to enter, when to exit, and then when to stay away from the market. It's as simple as that. So that will be the end of this second episode. So please stay tuned, subscribe, and then like our videos. Thank you very much. See you soon.